Welcome back to Sector Talks. I'm Leanne Alfaro, I'm producer and host here at Nasdaq. Joining me right now is Jack Menke, who's an advisory analyst here at Nasdaq. Thank you so much for joining us.
Thank you for being here.
So today we're going to talk a little bit about the rebound in the tech sector.
Yes.
So let's kick it right off with that. In Q4, we definitely saw a stark contrast to what's happening right now. We've seen a 10% increase so far this year, which is a stark contrast to last year. Tell us, what are the factors that are causing this rebound?
Yeah, so just maybe to put things in perspective with Q4, I have some pretty interesting stats to kind of put everything into perspective. So the fourth quarter performance for the tech sector was actually the second largest percentage decline over the last 15 years, only being eclipsed by the 2008 performance in Q4. And if we look at 2018, from September to December, we saw actually 4 straight months of declines, which has actually only happened one other time over the last 15 years, that being actually in 2006. And actually, when we saw the recession, we actually didn't even see more than 3 months of straight declines in the tech sector. So just to kind of give you a sense of how almost rare the Q4 performance was. And one final stat is for the fourth quarter performance is that if you look back since 2012, which has been about 24 quarters, the tech sector has only declined in 4 of those quarters. So about more than 80% of the time, the tech sector has been positive for a quarter. So to kind of see this dramatic decline for the tech sector in the fourth quarter of 2018 has just not really happened over the past many quarters or many years. And I think it's really been coming from a lot of different sources, the selling pressure in the tech sector. So you have headlines about slowing global growth. You had rising interest rates, hedge fund redemptions, just really a number of sources kind of leading to the technical breakdown in the sector. And that has really kind of put a really bad impression, I guess, on the sector overall for the end of the year. But to kind of bring back the rebound that we've been seeing, a lot of those narratives over Q4 has really kind of created oversold conditions. And I think that's what's really been contributing to the rebound over the first quarter. And there have been a couple other tailwinds that have been helping the sector overall and really the markets overall. And that's really been the jobs reports. The last 2 have been really, really phenomenal. That's been helping the sector and the markets overall. And then you've had the Fed interest rate discussion about interest rates and how there really isn't going to be any language or indication that there's going to be any rate hikes in 2018. So that's really been propping up the sector for most of the year, essentially, for this year at least.
Yeah, and now, like, looking at the earnings, recent tech earnings, what have they signaled for the sector?
So I think what we really need to concentrate on is that a lot of the things that I talked about before, creating kind of like these oversold conditions, a lot of the bad news I think has already been priced in towards the end of the year last year. And I think when we're kind of looking at the rebound in January and part of February so far, that it just created a lot of buying opportunities. The sector and the markets in general were engaging in major technical breakdowns, and it's really kind of just brought in a lot of new investors who kind of see opportunities in the sector, and kind of like what I mentioned before about the jobs report and the possibility of lack of interest rate hikes for the year or for 2019 at least. That's really kind of what's helped been driving up the sector, and I think in particular most of the gains have been kind of centered around software and semiconductor stocks. And actually semiconductors, we're not talking about just about a handful of companies. We're talking about several companies that, earnings being a big part of it, have increased really over 20, 25, 30% this year. And that is just, has really been a telltale sign of the sector over the last, 2, 3, or 4 years. But I think, there has been sort of mixed earnings, from a lot of the mega cap names, but that really hasn't shifted any of the positive sentiment and a lot of the rebound that we've seen so far this year. So it's been a little bit of a mixed bag for the quarter, but it still seems to be doing fairly okay so far.
And you've already kind of addressed this, but what industries stand the most to gain then?
Yeah, so semiconductors, I mean, I don't know how much more gain there is gonna be in the sector, but we're gonna have to see how that plays out. Obviously, it has its hands in a lot of other major sectors in the market, so that'll be something to kind of pay attention to. And I think software is gonna be another major subsector within tech to pay attention to. There are a number of companies that are trading at 52-week highs or even all-time high levels. And if you really look at it from a business perspective, those software companies are probably the most insulated, just given how much development there is needed when implementing it into a company's sort of day-to-day routine. So semiconductors and I think software are going to be the primary drivers for the sector for the rest of the year.
And finally, what are the potential remaining headwinds for the rest of Q1?
Headwinds. So as we see today, the markets are down 1.5%, and we saw reports of Trump and Xi not being able to, or at least reports of them not meeting before March 1st, which has really kind of caused a lot of negative pressure. So China, I think that the trade talks with China are always going to be a constant force in the markets. But I think really one thing to look forward to, at least in the short term, is the government shutdown. And we did see a little bit of relief a couple of weeks ago with them reopening the government, but I don't know if, well, at least Americans really kind of understood what the ramifications were when you have an elongated shutdown. And I think if that were to kind of bring back to the forth of the news front, looking at this February 15th deadline, I think that could be a really big negative catalyst for the sector and for the markets in general.
So that's definitely something we'll keep an eye out on. February
Yes.
15th, definitely approaching. Happy
Absolutely.
Valentine's Day to all. Jack, thank you so much for joining us.
Thank you.
And Nasdaq followers, please stay tuned for